Welcome back to CEO Money. I'm Michael Yorba, your host. All right, we have a special guest with us for this segment, Michael Markowski, Dynasty Wealth Investing. All right, Michael, welcome to the show.
It's great to be here, Michael. Good to see you.
Thanks for flying in for this. All right, Michael, give us a brief background, introduce yourself to our audience of who you are, and then let's talk about what you're talking about doing, how you're breaking the mold with Dynasty Wealth Investing and what it entails. But first, tell us about you.
Well, I entered the securities business in 1977, 41 years ago, with Merrill Lynch. And while I was there, I was a young rookie broker back then, very young, I was the youngest guy Merrill Lynch had hired, probably throughout its entire existence back then. I came out of college in a bad time when they weren't hiring. People didn't have sales experience. So in my training class, my manager put me in an extended training class, and I was a gopher, and I used to have to do, one of my jobs was the tear sheets, the S&P tear sheets. And what happened was one day I get this thing in the mail, and it's a letter from S&P, and it's talking about the top 10 earnings performers in the stock market over the previous 10 years. And I said to myself, I was such a rookie, I said, what the hell does this have to do with stocks? Mm-hmm. So I said, you know what, I'm going to go into the library back at Merrill Lynch and look these stocks up to see how they did, these top 10 earnings performers through 76, I believe it was, 67 to 76 or something like that. And I was shocked. All 10 of them went up at least 25 times over the 10-year period. So then I realized that I made my goal right then and there before I ever wrote a ticket as a broker. Hey, I want to be known as the expert. I want to be the expert at finding these kind of companies for my clients. So what happened is I graduated from training school, and then they give me a sheet. They said, listen, start selling stocks. You're licensed. You're on straight commission. Start selling stocks. So I looked at the Merrill Lynch buy list. They had 1,000 stocks on the buy list. There was only 2 that were under $10 a share because that's the only thing I could figure out. So the first one I bought was Geico.
Okay.
And it was $7 a share. And I didn't know it at the time, but Warren Buffett was accumulating, and the stock just stayed at the same price forever. And the reason why is Buffett was accumulating the stock, wound up buying the whole thing out for over 10 times what my clients were paying for it. So that was my first stock in the stock market. So from there I went on to DLJ, and DLJ was a wonderful place to work. Donaldson, Lufkin, and Gin Red, and I did a lot of research there, raised capital for the Sprout Venture Capital Group, one of the first venture capital groups, and DLJ was just a wonderful firm. And while I was there, I did some research. I was able to get access to the DLJ computers and did some research, and that's when I got hooked on math driving the markets, because Eric Miller at the time had done this. We had the Portfolio Managers Weekly, which was published for portfolio managers by Donaldson Lufkin every week. And Eric Miller, the chief investment officer of the firm, had charted out and found 250 companies that over the period from 74 to 83 multiplied, this was back in 84, the study, multiplied by a median 19 times in price over that period of time, which was a shock because that was the bear market. To have 250 stocks go up by median 19 times. So I went in and did the research on those companies. I said, I got to find out what the common denominator is for these. And I found it. I found that common denominator, and it was revenue growth. So I found there was a correlation between revenue growth and stock price performance. There was nothing else. There was a correlation. There was only that. So then so that's what I've been focusing my whole career on, is finding those companies that can multiply as many times as possible. So let's fast forward. Well, I did some work on what happened I'm a visionary analyst. What I'm looking for is anomalies in the market to capitalize on. So what happened when Enron went out of business, mysteriously bankrupt in December of 2001, after being $55 a share 6 months earlier and reporting record earnings for 2 straight quarters in record revenue, I went in and did an autopsy on Enron. And I did that autopsy, and I found out that it died from the same cause of death as Sunbeam, Enron, and and I found out what caused its death. And I went back and did a back test and found 100 companies that had the same situation.
Michael, let me jump in there because we only have so much time on this one. Probably got another 4 minutes, and I want to get to Dynasty Wealth Investing. But before we do, you got some accolade from Forbes. Is that right?
Fortune named me as one of the 50 great investors. And what happened, just to make a long story short, my work on Enron enabled me to develop an algorithm that I used to predict the bankruptcy of Lehman a year in advance in my Equities Magazine column. So let's fast forward again, so we only got a couple of minutes here. So my last work that I've been working on, that is king anomalies, are these disruptor companies that are multiplying by 1,000 times.
There we go. That's what I
Okay.
wanted now.
So I've been researching those things, Uber, Airbnb, and all these things, and the whole digital economy. I consider myself to be a student, if not an expert, of the digital economy. So I've been doing all that work, and I now see there's a new industry that's emerging that's going to be as big as social media, and that's the social investing communities industry. And that's what I'm working on. That's what Dynasty Wealth is. Dynasty Wealth is a social investing community.
And now Ed wants to know what that means.
Well, what it is what happened is because of the Dodd-Frank and because of the Jobs Act, people are now allowed for the first time, the masses, to buy into unaccredited investors are allowed to buy into startups. So the one issue that the SEC made with this, or the law they put into place, is that the startups, to buy into the startups, the platforms, the regulated platforms, cannot market them or curate them. So if a regulated platform has 1,000 companies on it, it can't say, "Hey, buy this one over that one." It's that they can't do that. So the need for social investing communities has arose. And those communities teach the masses how to invest, give them ideas on what to invest in. We curate the deals and show them the best deals, and they come in, and that's what they invest in. And there's companies that we have that have the potential of multiplying by 100, 500 times right now that we're following right now, that are private company startups that the public can invest in.
Okay. And you have got some real tall timber working with you on this. I don't know if you want to drop any names, you don't have to, but give us a little background on the backers that are working with you and what you have planned to do with us, how we can help.
Well, the things that I'm working on with, I'm working with a group that is, I would say, is the most sophisticated. I'm in discussions right now with the group that's the most sophisticated family office network in the world. They're visionary investors. They invest significant amounts in these unicorns. I'm working with them right now, so that's what I'm sort of in discussions with them. We're moving along nicely.
But you're going to bring those companies out on our show.
Absolutely. So why I'm here, I'm so interested in WFN1 and this show and you, Michael, is because you guys have high-quality startup stuff. You know what you're doing. You know what you're talking about. I can hear in the interviews. I've listened to you interview these candidates. The startup industry is going to explode. It's going to be bigger than the ICOs, what's going to happen. And you're positioned to be involved in this. And I've created an ecosystem with a multiple number of players, and it's the infrastructure for this whole new industry that's emerging, which is a social investing communities industry. It's the infrastructure for that industry. And I've done a lot of research on the infrastructure that emerged for the web.
Okay. Now this isn't our last conversation, it's just our first. How do people, because we only have like 30 seconds, how do they reach you to further the conversations? And ladies and gentlemen, we're going to be having a conversation about this after we get off the show. But real quick, how do they reach you to find out more about this?
Go to dynastywealth.com and sign up for the free newsletter. Watch the videos. There's digital economy videos on there. Wealth of information. Go through that because you become really educated, and your listeners will be in the position to make a tremendous amount of money.
Great. Michael, thanks for being a guest on the show.
Okay, thanks, Michael.
The CEO Money with Michael Yorba, segment brought to you by Tycon Partners. Don't forget, podcasts wherever you need them. Thanks for all the correspondence with our audience from the Dallas-Fort Worth to around the world. We'll be back tomorrow with more great content. And don't forget, we're going to be coming down to the Network Bar. The segment brought to you by the Network Bar.